Welcome to this week's episode of Your Stock Request for the 5th of December. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Silex, WiseTech, MA Financial, AU Clinical Labs and Actinogen. So if you have a request, please send it through. Make sure you've signed up to the free newsletter, but our best recommendations come out on Tuesday in the Dynamic Investor Report, so please make sure you're getting that report. But if you do enjoy these videos, we'd love you to share them on social media or even leave us a review. Our main business is in portfolio management, so if you'd like to have a broking account with me, please give me a call, and all the advice used general only. So this is Silex going back the past few years. As we could see, it's been trending higher. In terms of shorter term, we could see that since bottoming out there in September, the trend higher has been very strong. So, you know, we've got the higher highs, the higher lows, very good sort of bouncing every time it takes a dip. It's getting close to this recent peak near 650, so I'd expect it to then sort of cool off near 650, maybe trade sideways for a little bit, which would be a positive for the stock considering the V-shaped recovery, and that will set it up for a further move higher. Okay, WiseTech, obviously in the past few months it's become quite volatile, and that can be a bit dangerous depending on where you're picking up the stock. Obviously a lot of volumes, volume on the way down, on the way back up again. If we have a look at the weekly, we could see recent price action sort of bounced off the right level. I think because of this sort of V-shaped move here, at best you see it just move sideways a bit, which would be good for the stock. So it just needs to, I think, settle down just under the recent peak. And then if it can do that, then you could feel a bit more confident that if you were to get an upside break, that would be a buying opportunity. Okay, MAF. So if you sort of have a look at this weekly chart, we could see, sort of sideways here for a while, potentially basing. I think the sort of break above $6 here was good from a longer term perspective. But shorter term, it looks like since making that peak in November, easing back, possibly a little bull flag, but it is back at the previous sort of low point. So it needs to really hold on to these levels. So I guess if you were to buy it, you potentially buy it here, but I'd have a stop really close by under this low because if that breaks, it might just further deteriorate. ACL, so been doing well in the past 6 months. Nice sort of bounce here, consolidation, big rally, consolidating. I mean, two ways to look at it. Potentially you've got this sort of bull flag and maybe it's now breaking out. But having said that, this level here we could see is a, just a fairly heavy sort of resistance zone. So, I think what you need is ideally if you could see it, say, close above 360, then you could feel a bit more comfortable that the consolidation is over and it's ready to head higher. Okay, finally ACW, so we could see that it's a type of stock over the past year when it gets a bit of a break, it has a quick run on a few occasions. Obviously it's sort of at the bottom of the range, it's very volatile and dangerous, but looking at it here, it's sort of drifted sideways for a while, and in the past few days it's managed to get above these little peaks. The volume's picked up, so potentially it's going on for another run. We don't know if it's going to stop here or where it could go, but potentially you could use this as a new buying opportunity, and you just need to keep pretty tight stops, potentially just under one of these low points here. Okay, well that's all for this week. If you have a request, send it through and we'll try to cover it next Thursday.